Good evening, all the participants. I'm Aarti Bansal, Secretary to the Internal Audit Standards Board. Welcome you to this webinar on internal audit of retail industry. I invite our chairman, C.A. Chandrasekhar Chitle sir. Moderator has joined. Uh, C.A. Chandrasekhar V. Chitle sir to share his word of wisdom with the participants.
Well, thank you. And I welcome all of you to this webinar, which is organized by Internal Audit Standards Board. CA Pritesh Munut is moderator, and the expert faculty is Manoj Agarwalji. As you are aware, that now internal audit is gaining prominence. However, in case of internal audit, specific inputs are required by the industry. It is not a tick box approach. Like in case of statutory audit, maybe you are confined to true and fair view. And whatever guidance, etc., is concerned, that is not cup of tea of the statutory auditor. But as an internal auditor, now it has not remained only fault finding, but also offering the solutions to those problems and ensuring that those problems do not recur. So in this background, the board is organizing webinars on various industries because each industry has got its own features. And once when you understand those typical features, you are able to dispense your internal audit function in more appropriate manner. We have earlier considered relating to hotel industry. Today, we are going to consider retail industry, maybe software industry, etc. So take example of software industry, where 70-80% expenditure is on human resource. Human resource is the plant and machinery, and it is the heart and brain of the industry. So that plays pivotal role in case of information technology industry. Similarly, in case of retail industry, what are those peculiarities which an internal auditor should address? What are the SOPs it should develop for the purpose of dispensing assignments in retail sector? All these things we would be able to know. And we are very fortunate that Manoj Agarwalji, who is having vast experience of this particular field, would be sharing his experience of maybe a couple of decades within a couple of hours. So we are very lucky that you will be having this information. Of course, if you want to ask any specific queries, you can put them in chat box and the moderator will ask them at the end of the session. Thank you. Over to the moderator.
Definitely. Thank you so much, sir, for your wonderful welcome address to this internal audit of retail industry webinar. Now, we have with us our speaker, today's speaker, CA Manoj Agrawal, sir. So I'll introduce about him. CA Manoj Agrawal, sir, is a leading internal audit and risk management department of one of the India's largest specialty footwear retailers. He has over 20 years of experience in delivering assurance and advisory services to management in retail, facility management, BFSI industries. And also prior to this, he was heading internal audit and risk management of Indian operations of ISS and was leader of IT and ITES vertical for ANB Consulting. He has held commendable positions like course director for enterprise risk management for ICI in 2010 and committee of members of in industry of WIRC. He currently is a president of ACIIA, a concern of over 19 affiliates with over 60,000 internal audit professionals across ASIA. Also, he is a secretary for IIA India. Sir has written various blogs on risk and control, which is available on LinkedIn. His blogs were published by ICACI and IIA. He's done his FCA and RISA from ICI. He is holding CIA CRMA from Institute of Internal Auditors. Also, he has done CISA from ISACA USA. So I welcome CA Manoj Agrawal, sir, for this webinar on internal audit of retail industry. So I request CA Manoj Agrawal, sir, to please share your knowledge with everyone. Yes, sir. Over to you, sir.
Thank you, Pritesh ji. Thank you, Chandrasekhar ji. Thanks, ICI and the Internal Audit Standard Board. And thank you, Aarti ji. It's always an honor to speak at your alma mater. It gives you a sense of achievement. At the same time, sometimes it also gives you some butterflies in your stomach because this institute is made up of highly knowledgeable, highly educated members. I believe many of them are having the experience, such an experience. I'm not, I can say I have taken that many breath in the world. So let me just put up my presentation on the screen. Pritesh, can you confirm that the presentation is there and is in the print screen mode?
Yes, sir. Yes, sir. We
PowerPoint
can
mode.
see your presentation.
Okay,
Yes.
great. So, thank you, my friends, my colleagues, my seniors in the profession, and the would-be professionals. Pritesh ji has already covered. So typically, I keep this slide in my presentation so that if anyone is looking at the presentation in future, and then they know who's the person who made the presentation. So disclaimer, I always consider this is the most important slide for me because this is my personal risk management. All the contents of the presentation constitute the opinion of the speaker and the speaker alone. That is mine. They do not represent the views and opinions of the speaker's employer, my supervisor, nor do they represent the views of organization, business institution the speaker is or has been part of. So whatever I'm going to share today, it's my personal opinion. They do not represent the ICI opinion. So all good thing to my alma mater, all bad thing to me. Some of the situation that I mentioned may not be true, and identities of any parties involved have been disguised, and images used may be subject to copyright. So, what is your expectations? What do you want from this session? So, I would request everyone, if they have any expectations so before joining this, so if they have any expectations, what they are going to learn, if they have any queries which they want to be answered, if they are attending this because of a new industry, feel free to share your expectations in the chat box. This will help you to see that whether this webinar is fulfilling your expectations, and it will also help my moderator Pritesh ji if I am going off the track. Feel free to write your expectations. While you are writing, there are two great quotes. One is from Roman philosopher Seneca. While we teach, we learn. We learn when we teach. So I try to do this and I've always learned. I hope I will learn something today, and I do want to learn. Second is from a gentleman called Scott Fitzgerald. He has given a very interesting quote. The test of a first-rate intelligence is the ability to hold two opposite ideas in mind at the same time and still retain the ability to function. One should, for example, be able to see the things are hopeless and yet be determined to make them otherwise. Now, my dear friend, a question to you. What happens when you hold two opposing ideas in the mind at the same time and you do not retain the ability to function? So the code says still retain the ability to function, but ask yourself a question. What is that situation called if you do not have ability to function? That thing is called a disease. This is called cognitive dissonance. But if you retain the ability to function, it becomes a first-rate intelligence. And I believe all my internal auditors friends, wherever they are, wherever you are, you all have carry first-rate intelligence. Why? Because our job is to go identify issues, be positive, give suggestion so that it get improved. Many times we need to, we face roadblocks, obstacles, but we are persistent, we are determined, and that is what I would say the quality of a first-rate intelligence. That we know that things may not be good, but still we carry on and do our work. So congratulate yourself for having a first-rate intelligence. Retail. Retail is a very interesting industry. So retail is all about details. What differentiate a say manufacturing company vis-a-vis a retail company is the volume. The volume in retail is humongous. You know, a company is producing car. So whenever in the factory, the cars would be getting produced in another company, uh, the various spare parts getting produced. But is the showroom or the dealers or maybe the spare parts who sells all of this? So everyone is manufacturing one part, but in retail, they are doing voluminous activity. It's all about detail. Every customer is unique. So what differentiated retail industry vis-a-vis any industry is the quantum, it's the volume, because retail means volume. Another interesting thing about retail is even today the labor is cheaper than the various tools. Once I went to UK, so I saw that there is a self-checkout facilities there in a retail showroom. Why the self-checkout facility is there? The labor is costly there. Of course, they have kept one person to help people who are not that used to managing the self-checkout facility. Now let's compare the same scenario in India. When I went to a retail showroom, for example, Decathlon, so they also have the same facility, but there I also find the helping hand who just sitting behind, standing behind the counter and help me carry out the transaction. Theoretically, I can carry out the transaction on my own, but the person is still there. So he is there to help the customers. Retail also means personalization, customization at mass. Now, see, whenever you go to an hotel, what do you expect? Especially if you're going for the second time and spend a good amount of money and going in a short interval, you expect that person to remember the nitty-gritties of what you have ordered. In fact, they do remember you, they do see you, and they recall what you have ordered, how you have ordered, whether it is extra salt or less salt. And this is what? This is customization at scale. When you go to a footwear company, so they have various designs, various color. but you expect them to carry your favorite color, which you have, purchased 2 years back. And you expect the person to remember your name and greet you. If they remember you and greet you, you become very happy. This is what? This is customization at scale. Retail is detail where people are doing the same thing repetitively. What happens on a shop floor? You reach out, you go to any store, modern store, where there a salesman greets you at the door. Then he asks you what you're looking for, try to help you. Now, if the store has a footfall of 100 customer, then that salesman would be doing this activity consistently, theoretically, consistently 100 times in a day. So it's just doing the same thing repetitively. Of course, they always introduce some nuances, some improvement. The idea is to make a sale. And great companies does this repetitive job efficiently and better. You take any activity. So from shop floor to, let's say, receiving of goods. If the shop is selling fantastically, they need to replenish the goods. When the goods come, they need to ensure that it goes to an appropriate shelf. If they are receiving the goods, that means somebody is dispatching the goods. That someone is to ensure that the goods are being dispatched in a timely manner, in a right manner, in the required quantity of the right product to the right location, right time. So they need to do this job every time, consistently, effectively, efficiently, and in a better manner. So this is what I found very interesting in retail, which differentiate it from various other industries. We are going to cover the various elements of retail in detail. Next slides. This is a tentative audit universe, how it looks like in a retail organization. It has retail operations, it has supply chain inventory, pricing and margin, e-commerce and digital channel, project and strategic initiative, human resources, and there are various sub-elements. And mind you, this is a very generic audit universe, and every retail organization is unique, and every successful organization follow certain practices consistently, which are different from others. You will find these practices are different even within the same industry or sub a segment of an industry. Let's say QSR. So you go to two restaurant, you will find that these two similar restaurant. Let's take say Burger King versus McDonald's. Both are in QSR, both are selling burger, but both of them are doing something different, which is making us go to both of them repetitively. So I will allow you to just go through this audit universe, about a few seconds to a minute. So if you have any questions, feel free to ask. It would be a good idea if you ask your question based on the slide, yeah, so that the moderator can read out all these questions as and when appropriate towards the end. So you can also ask any questions. I'm happy to answer all of your questions. One of the biggest concern in retail organization is the fraud risk. Today, the scale is increasing, the speed is increasing, and especially in retail, where the exposure point is huge. A chain with, let's say, 2,000 stores. So if something is going wrong on the front end, then they have exposure at 2,000 stores. If something is going wrong on their e-commerce portal, then the speed at which transaction get conducted is so fast. So because of that, if there is any loose end and you get hit with any cost leakage or fraud, the losses which happens is also become fast and large. And many times the our own employees commit the fraud because it become easier. Retail is about hyper customization. For hyper customization, you need to empower them, and in this empowering can lead to the fraud. For example, let's take a hypothetical scenario. There is a salesman. He has a friend, and let's say he purchased a shirt, and because he wanted to go to a party in that shirt, but after the party is over he's coming back and saying, hey, I want to return this shirt because it is not fitting me. And the always helping salesman takes that return and give him a credit note. Nowadays, a large number of companies prefer to issue a credit note instead of cash refund. So issue a credit note. Now, this person, he has used that particular merchandise for a purpose for which he wanted and still able to carry back the amount which he spent. Now he can use the same thing again and again, maybe at different stores, maybe different merchandise. Some of the retailers give freedom. For example, it can be 2%, it can be 5% discount to the customer for customer retention. What prevents the always helping salesman to offer the discount without asking to his near and dear? DPDP is coming. So, and we all become highly aware about the privacy practices, don't want to share our phone number. What prevent that always helping salesman to use his or her own phone number or one of his family's phone number or friend's phone number to record their transaction and earn the loyalty points? So if you want to protect your privacy, then you won't be able to earn loyalty points. You need to give them up. So that gives the risk that organization is facing. The loyalty point is given to basically entertain the customer, and it's a cost. Organizations are ready to incur that cost, but they are not happy to you know have this kind of leakages in the system. Now, just visualize again, 2000 stores, and a store would be having, let's say, 5 employees or 10 employees. The landscape, the exposure becomes so wide, and you as an internal auditor need to ensure that you keep an eye on such kind of issues and prevent them from the beginning, or prevent them from becoming too big. So I hope you would have read this slide. I move to the next slide. One of the areas very important is the masters. You take any masters, be it item master, vendor master, customer master, tax master, everything. Is your masters are in sync. You go to any retail industry, you will always find some one or other issues in the masters. Of course, they are managing it, from the on the front end. But as an internal audit, you will always find one or another issues with the item master. They will never be in sync. Why? Why? Because there is always a life cycle or a cycle when you order an item to, you order an item, raise a PO, goods comes, get delivered, you put it on the shelf, sync your POS, and most of the companies would have a different POS as compared to the accounting system. They are not talking to each other. PO get raised in one system, POS into another system. Why there is a cost involved? So because of there are two different systems, they need to get synced, and they would not be syncing. There would always be one or another error. So are the item master in sync? Now, even if item master, if they are able to manage somehow item master in sync, now there is an increase in cost, which is leading to the change in prices, a reduction in the cost, leading to the change in the prices. How and how in and which way they offer this discount to the customer? Do they offer, discount? That is, this become 5% cheaper, or they decide that we don't want to encourage discount, and they change the MRP. So there is a process through which they will do it. But recalling the goods from 2000 stores, changing that, it's a huge challenge. Now, even if you're not changing, you want to sell goods at the new MRP. All new orders are happening at the new MRP, and that goods will also be there in the store. How do you ensure that there only one MRP is live in a store? Or if there are two MRP, then there are appropriate checks and balances. So, you will find item master and accounting POS. If you have e-commerce website, then that creates another dimension. So we said accounting system, and there is the POS system. Now your own website, again there would be a third system. Now, do we have integrated system? Yes, we have, but they cost bomb. If you are present on marketplaces, that will create another MRP. Do we have systems? Now the systems is to talk to the systems of those marketplaces, which itself is another challenge. So typically people are handling through APIs, but how to ensure that your virtual records or digital records are in sync with the physical record at the same place at the same time. Then there are MRP related concerns, there are taxes related concerns. When you change your MRP, it has an impact on taxes. Then, one funny thing, if you have two different systems, then how do you ensure that your PUs are being issued at the item master rate? Now it sounds so silly, but yes, this do happen. Is your PR being issued at the item master rate? Are they issued at some different rate? Then if a different rate, then how the GRN happens? How does the Myro or goods GR invoicing is happening? If it's a small store, limited scale, this thing become manageable. But when these things are happening at scale, then you need to be cautious, because to open up a new store, a company can open a new store in let's say 1 month. When I say one store, I'm talking about a general timeline. Can they, and if they want to open 10 stores, they can still open in 1 month. But can you put all your controls into ARP, customize it, everything in 1 month? Answer is no. Then is your sales is happening at a item master rate? I will again take that example of 2000 stores and let's say 1000 SKUs. So that will give you what, 2 million, if every store is selling one SKU only once, then that will give you 2 million records. And if they are doing it every day, then it's what, 700 million records. Now 700 million, it can be 700 million invoices. So how do you ensure that the sales is happening at the right prices? Of course, IT controls do play a part, but you as an auditor, how you will demonstrate that you have actually verified that one control is working, secondly, the controls were not tempered, Third, is any way through which you can, go through the entire data in one go and see is there any sale which is happening at prices other than what is there in the master. And that too, considering there would be changes in the price, somewhere middle of the year. So these are some unique items we will find in detail. Moving to the next slide, your vendor master or various master. Now, how do you ensure your vendor master is complete, as in sync? You know, in retail, they may be present in 25 states. They may be receiving, supplies from 25 states. Is it possible that a single vendor is supplying them in 25 states? It is also possible that 25 states is supplying in a one single store. How do you ensure that your vendor master is complete, is in sync? That is, your PAN and GST is in sync. There is no mismatch. There is also place of supply. In a typical ERP, your GST number is only a number. You can buy your models. Otherwise, you need to ensure that the place of supply is appropriately filled up. How do you ensure that if it is 27, place of supply is 27, then GST number applicable to that thing is 27. And in case it is something else, then IGST kicks in. So it is all about you need to control your master as well as the configuration. Now the fraud angle. Is any of your employee is also acting as a vendor? Now today we want vendors to give GST invoice. With GST you can get the PAN. It's in a way simple matter. You can simple compare your employee PAN versus vendor PAN, employee PAN versus vendor GST, the PAN number. You can also go and look up on the GST portal for this lookup. There are vendors who supplies you APIs which get integrated with your ERP system, and you can go look up and they will tell you that hey, this PAN number is doing some business, is doing business with you or somebody else. Now, a number of companies restrict their employees to be part of the loyalty program, especially the front end people. Why? Because if they are part of that thing, then maybe it will be difficult to monitor, at scale whether that additional sale booked in a month is genuine or not. So this says he no, we don't want you to be part of loyalty program. And how do you make this lookup with the loyalty program data? Employee may have given you those phone number, one phone number, but they may be using somebody else's phone number. But at least you can look up this and ensure that the phone number which is known to organization are not being misused, are not being used in the fraud. See, inflation give rise to changes in cost and MRP. Then how does that get impacted? There are typically two methods through which organization handles. One method is they create a new SKU, and in that SKU, though it's just similar looking, everything is same. They ensure that the revised cost and MRP are being taken there, and the old SKU with the old cost and MRP get sold off at the stores. But few organization also they simply update the prices or cost in the system, because they don't want to tamper with the various field. Creating a new SKU versus changing that SKU. Some of the company finds that changing SKU is much easier as compared to creating a new code. then how do you ensure that this first changes is being carried out you, in the accounting system, but also in the physical system in the warehouses, etc. In retail, there is a huge turnover of employees, especially on the front end. And you need to have a very strong control. Otherwise, everywhere, everywhere you will find that there are a large number of inactive users, especially on the POS side, which would be having employees, say employee number or some reference code through which they are given commission. So for every cell, they need to input that code. And once the month get over, based on this code, they determine what is the amount of sale an employee has done and commission have been given. And since number of people don't, give resignation, they simply stop coming. So it leads to a lot of inactive users. Some organization says ki one supplier, one item, one supplier. So basically, if an item which is supplied by a supplier, that item will not be supplied by other supplier. Yes, these kind of practices do exist. Then how do you ensure that you are not ordering that particular item from other vendor? So this is all on the master side. Moving on the sales side. You go to a retail store and you say ki, okay, I'm going to buy 2 items. Then you say ki, I'm going to take another item. Then suddenly you say ki, hey guys, you're not taking card. Alright, let's say you're saying, hey guys, you're not taking cash. I don't have card. You guys are not taking UPI. I have only UPI. So invoice has been done, everything has been done. Now you don't want to take the goods. This can be a genuine reason, it can be a non-genuine reason. So you paid in cash, and after you left, the salesman has cancelled the invoice. Why? Because the scheme would be running, they would be, using some discount. Maybe they are clubbing some scheme and taking benefit and pocketing the cash. So one of the things that need to be seen is what is the ratio of invoice cancel. You will find invoice cancellation for genuine reason, but at the same time you will also find for non-genuine reason. Either there you need to put checks and balances or you need to monitor this. For example, you can monitor top 5 stores, so who has the largest ratio of invoice cancel, maybe top 5 stores with the largest number of invoice cancel. So you need to find what works for you after doing that experimentation. A large number of companies, are giving cash refund to the customer. Why? Because once the cash has been went out for right reason or wrong reason, it is not going to come back. So they says ki no cash refund, only credit note. Of course, certain exception cases they do give cash refund, but they prefer to give credit note. Idea is ki if we give credit note, the person will again come and do some shopping. So if you're giving cash refund, a showroom is giving cash refund, so that it to be investigated, monitored. There are genuine reasons also that their payment has been made, but it was a wrong. There was a wrong from the salesman. They have inputted something wrong, and they cannot wait for credit cards to be get reversed or something. So they want that cash to be refunded, or the customer is a very powerful person. He's saying, "I'm not going to listen. I want my cash back." So you need to do give cash back, but you do need to do monitor. You went to showroom with your phone saying that you will make the payment through UPI. Showroom is offering UPI, and somehow that is not working. So what needs to be done? Yeah, the helpful salesman says, ki, okay, I'm ready to help you. You make the payment here and I will do the payment to the company. So invoice generated, you become happy and taken the goods, saying very good service. Salesman become very happy. Why? Because if they want to do mischief, so they got the money. Of course, the inventory went out. So they are going to raise the bill. But at what rate? At what, to whose name? Then transaction at odd times. And we need to also define what is odd time. Few companies define odd time is after 10 p.m. in the night. Some companies decide after 12 p.m. in the night. Why such a difference? Maybe the customer are there in the second showroom, or maybe because of the process are such that it generally takes 1 hour to close the showroom and the POS machine and come and do the closing. So what are the transition which is happening at the wrong time? And you have to also factor in, there are festivals. In India, there is a large number of festivals where the shops run, you know, late in the evening or night. Some places is 24 hours. So if let's say there is a Diwali or there is a Eid and the shop is running late, then you need to identify at what point it become odd time. Items sold with 100% discount or a higher percentage discount other than items. See, you will be thinking, how come item gets sold at 100% discount? Yes, it do happens, and that is what make retail industry very interesting. And that is where it become about a detail. What if the company allow some discount coupon to be redeemed? Let's say 500 rupees discount coupon to be redeemed, and you are buying something, let's say 450 rupees worth of goods. So will it be coming as 100% voucher? It will coming as a discount. Companies follow their own methodology. Companies running say flat 50%, and you're finding 60-70%. Then what is happening? So you need to do this kind of analysis to understand the anomalies. Now, sales is written, sales return. Let's say you have a policy of return within 3 months or no return. And you are seeing returns are happening even after 3 months. Why? Or let's say you are saying ki one particular showroom, lots of return of a specific type of customer. Then what is happening? At one of my client place in earlier time, what we have observed is salesmen, what the salesman used to do. Salesman used to purchase the fake merchandise, and he was aware about the various stores that can be cancer. That you can buy at one place, sell it, return at another place. So he used to show that they have received return from certain specific segment. And once I've analyzed at that place, I realized there's a few millions worth of return the salesman had done. And that also means there's merchandise issues. Then employee discount. So companies offer discount to employees. Now they are supposed to use it for their family and friends. But if there is a cash sales that can also be misused. Employee discount can be used. Ki, I have purchased this. So one of the thing that you can do is understand the kind of goods you are selling, understand the kind of people your employees are. If you are selling something which they are not going to buy, then they should not be buying. A salesman would be earning say 20-25,000 rupees in a month. If they are buying iPhone from you on discount, you know, then you need to really question whether they are actually doing that or not, and whether they are converting a cash sales into employee discount sales, or whether they are selling their discount rate to outside. I believe that one of the two most important thing is the sales money. Retail showroom, lots of cash get deposited, the cash get collected. Credit card, fantastic, not big problem because somebody is there to settle. If it is UPI, again no problem, it is coming to bank account. But if you receive lots of cash, then is this cash getting deposited next day or and in full? It should not happen that they have deposited cash but only half. Now consider a scenario, good sales period, Friday good sales, Saturday is second Saturday or fourth Saturday, banks are not working. So Friday sales, then Saturday sales, then Sunday sales. Fantastic sale. On Monday, that showroom manager or salesman stopped reporting to their duty. And when you inquire, you come to know that they run away with the money. Then credit card. So you need to monitor that credit card money, whether it is coming in full or not. Generally, there are bank-wise, TID-wise information, a large number of reconciling in that fashion only. But I need to still reconcile it. I've seen issues where money, a particular sales money is not coming. A partial, a portion of the sales money is not coming out of an invoice. So you need to monitor it very rigorously. Otherwise, one fine day you will hit with a very big amount of loss. No, in retail, everyone, it's such a place, anyone can go. So beside customer, the police officer can go, the BMC official can go. And sometimes they're forced to give some discount. Now, how do you know that this discount, whatever they've given, has been authorized? Not necessarily every discount would be coming with an evidence that somebody has authorized this. So if somebody is coming, they are giving discount, maybe they are giving discount to somebody else who is not coming. So one of the concern is the discount given is authorized. So you see, we're thinking how we can do that. But this is all about you need to monitor. All this is about those pain point issues, critical issues. When you go about it, see the process review anyway, you will be doing it. I'm not going to tell you that you need to create a plan, checklist, a risk. I'm telling you what kind of risk or issues you are going to find in retail industry. Now, you have issued a gift coupon. I'm saying, okay, there's a gift coupon. Now, if you have issued a gift coupon, this need to be knocked off. Now, somebody is coming, giving you a gift coupon, you are accepting that gift coupon. But are you also knocking off in the system? So you may have the physical copy of that particular gift coupon, or let's say you have that SMS of gift coupon code voucher from a customer. How do you know that this specific gift coupon or the specific that SMS is not being reused? So you need to monitor that. Once it is being used, it will get finished in the system. And of course, you need to monitor, cash collection greater than 50,000. You need to collect PAN. You can't collect more than 2 lakh rupees in cash from a customer in a series of transactions. If you are doing that, that would be the first one is a reporting. So it is not going to give a levy a penalty, but the second one, it can simply hit your bottom line because there would be penalty. Moving to the next slide. The second most important item which I consider is important in the industry is the stock or inventory. Now, in retail industry, remember I mentioned that great companies do things efficiently and better. So whether all the dispatches from stock warehouses happen in time, what will happen if it is not happening in time? There would be stock out, there will be loose sale, lost sale. Once a customer is dissatisfied, he or she is not going to come back. Whether all the dispatches from warehouse has been received in stores in time and according system in time. Now, this is all trade-offs. Now you have dispatch everything on time. You have showroom in, let's say, 200 cities, 25 states. How do you ensure that the goods are being being delivered in time at stores? Your stores will be present in high street as well as in mall, and mall will be saying, we will not give you entry after 11 a.m. You need to take your goods before that. We will not give you entry of your goods on Friday, Saturday, Sunday. You need to before that. So there are constraints and you need to work within those constraints. Now, if you have been given a choice, as a control, you would be saying, "Ki unless the goods is present in the POS system, the POS should not allow them to sell." Now somebody would have some different argument. Okay, I have received the goods slightly late. Customer is there, and I want to sell the goods, even though it is not there, but I want to sell the goods. How to go about that? These are some tough decisions which you need to do, plan to do. Now, the store is there; they are carrying a huge amount of money. Let's say there are 5 salesmen, average earning 25,000. So say 125,000 is the monthly salary slash commission, etc., etc. Showroom manager another 50,000. So close to 2 lakh rupees. But they are having stock worth let's say 1 crore in MRP. Let's say 50 lakhs in MRP. So are they doing that, doing the physical count diligently? Because if you lose an inventory, that there is a loss. Somebody need to fill that loss. Insurance company is not going to fill the loss because if it's a small quantity. If it's a large quantity, they are going to ask you, okay, you suffered a loss. Tell us what you are going to do in future to prevent this loss. So either you need to be a salesman and showroom manager need to be a. So how to prevent that? One of the things is that they should do a self count because that establishes accountability with them. And you need to also do a surprise physical count. Because if you don't do that, you don't know which store is making fun of you or making money out of you. Stock in transit. Now, there would always be some stock in transit which need to get monitored because if something has not been received, within a defined timeline, that means it may not exist in the system. If it may not exist in the system, then again, who's going to pay that loss? In retail, generally, companies give, you can say budget and you can say limit depending upon what they are selling. Let's say they will give a limit. The limit would be, say you go to a apparel store and you know that it can stock say 20,000 pieces of shirts. Now Are you going to send 30,000 pieces of shirt? Answer is no. Now, this out of 20,000 pieces of shirt, it is possible that some are not selling, some are selling fantastically, so, and some places the goods is lying for a few months, some places there is hardly any stock. So then various limits are there, so which need to get monitored. It should not happen that you don't monitor and you have stock which is not selling and you are wondering why things are not selling. You need to also do analysis of stock versus open to buy. What does it mean? Typically, retail company works with the month of inventory. Depending upon which industry they are, they will which segment they are. So they will define how many month or how many days or weeks inventory. Now, are they going to order inventory when goods have been sold at all the places? Answer is no. So they have a mechanism called open to buy. So they plan that they are going to say let's say 200 pieces in a year. They will bifurcate that in a month-wise numbers based on their past experience. Then they will keep monitoring what is the stock in hand, what they are selling, what is the goods in transit. Based on that, they will derive at what quantity to be ordered. So that is called open to buy. So you need to do that. You should not, the company should not be ordering items which are not selling. And say buyer-wise inventory analysis of ESR, rock bottom, not sold inventory. You have 50 buyers who buys various items. Of course, there's a complete chain, but if you do this kind of analysis, you know who is your star performer and who is your worst performer. Because who is consistently doing good work, so they will have good sales, very less USS, rock bottom. So you need to do this kind of analysis. Then there is a purchases. Vendor is giving you goods which you are storing, sending to stores, selling to customer. You need to have a very strong quality process, because if you don't have a very strong quality process, it is possible that you are selling substandard goods to your customer and they won't be returning. Then these goods need to be delivered on time. Why? Remember that open to buy. If they don't deliver on time or the goods are not delivered on time, it is going to impact my sales. Now ask yourself a question. You went to your Diwali shopping, you went to a particular store and they says ki hey, I don't have goods. They say I don't have those shirts and pants, but those will be there next week. And the Diwali is 2 days after. Are you going to wait for next week to purchase? Answer is no. So in some segments, once the sale has been lost, it is lost forever. Defective returns ratio. So if they are supplying you, there would also be some defective. What is that ratio? What is ratio of order versus defective? Because that will tell you ki who is your good supplier and who is your an average or below average supplier. PO issues, closures, reopens, edit analysis. You so you so 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 just assume a scenario. Your buyer is in collusion with your vendor, and vendor want to push certain items. Now they are raising a PO, and next day the order is getting delivered. How it can be? They will need some time to produce, gather, pack, and then deliver. Then is this are you witnessing that POs are getting open and quantities getting reduced? If some companies levy penalty if goods are not delivered on time, are they changing dates? So this kind of analysis you need to do it. Packing material. Now, packing material forms a small percentage of overall cost, but at the same time, packing material it itself is a significant cost. See, remember, every paisa saved is every paisa earned, and every paisa saved basically adds to your company's bottom line. Now, I will take example of shirt. How many shirts should go into one particular bag? Or are you going to give one bag for each shirt? So this kind of analysis you can do depending upon respective companies. Now, you go to a showroom and you are a regular customer, and you ask a person, I have something, can you give me a bag? Now tell me, the showroom manager is going to say, "Okay, I'm not going to give you a bag, their auditor is there who will make my life hell." Answer is no, they will give you that bag. Now that bag may cost say 10 rupees. You will be thinking, what will happen with the 10 rupees? But remember, 2000 stores, 1000 SKUs. So if every store sells one SKU, you know, every SKU only one quantity every day, it is amounts to 2 million invoices. 2 million into 10 rupees. Huge money. We invoice with no bags. Now they may be giving bags but no invoices. What does it mean? Maybe the customer is very good, environmental conscious, they are not carrying bags, or the person sitting on the counter doesn't know the process. He or she need to give a bag with the merchandise, and you are getting say an adverse. The store is getting an adverse audit report. Okay, they are not giving bags. Customer service is getting impacted. And wherever there is no control put in, you will also find negative balances. That is, they don't have bags, but they are issuing much higher quantity of bags. So it can be bag, it can be inventory. So you need to be cautious. See, all these are some signs that something might be going wrong. Now, say one item is GST. Now, when you look at it, GST in retail industry, so when you are selling, most probably it is B2C kind of transaction. So whatever is getting sold, you will simply say it is B2C and pay your liability accordingly. If in case it is some is B2B, then they would be raising it and you will be appropriately handling it. Maybe your boss will be handling it, or you would be creating an invoice from the backend and giving to them for them and making them which will allow them to claim ITC credit while booking the expenses. But if you need to do replenishments and goods to 2000 stores, and let's assume ki what you are sending, is a interstate, so you need to raise invoices to your stores, because when you send it, there is a output liability and which they can claim as an input. But you also know that e-way bill is required to be generated for any shipment greater than 50,000. Now, what if you have 10 stores, say within Mumbai? So, do you have a exemption? Answer is no. And if any of your goods has been caught without e-way bill number, it will lead to a penalty of at least rupees 10,000. And if this is key, you have intention to defraud the government, then there is an equal amount of penalty for the GST. So how do you ensure that the e-way bill is generated for every invoice greater than 50,000? And this is not only your B2C, B2B, this is your own internal transfer. which you might be doing it. You are claiming something vis-a-vis ITC shown on GST portal. Now, in retail, this become very, very important because it is possible a store is uh, delivering goods to your warehouse, or it is directly delivering goods to one of your stores. So you need to keep a tab, because if you if see, if there is a mismatch, you are not going to get the credit. If you don't pay to them, you are required to reverse the credit. In both the scenario, you turn out to be on the losing side. Now, thanks to GST, you may also have a scenario where something has been shown on the portal, but you have not booked the expenses. It can be a genuine reason that it is not your expense. It can be inefficiency in the processes. A department is sitting on the bills, and because of whatever reason, and it is not booked in the system. Uh, if that is happening, it will be a problematic. Now you need to generate invoice from the portal. I hope everyone has integrated their system so that whenever they raise invoice, eligible invoices, now get appropriately IRN reference get generated on the portal. Then GST claim versus GST shown in the books. Of course, you can also say GST claim versus GST shown versus GST available on the portal. You need to do this kind of analysis, because you will always find one or another issues, especially if your organization is working across 25 states. Then you will find one or another issue. Only thing which will prevent these issues from not occurring is if you have a very strong reconciliation system. So all these are basically reconciliation, which says ki, yes, I have issued 10 million invoices, out of which 2 million invoices are greater than 50,000, which is subject to e-way bill, and I have generated e-way bill for each and every eligible invoices. So all this reconciliation will help you ensure that your organization is protected. If you have debtors, then you need to do your channel-wise aging. Now, again, see, if you are running an e-commerce portal with, let's say, COD, you are running an e-commerce portal with payment gateway, credit card. You are also selling on marketplaces. So all this create unique situation. You need to look at all of those things channel-wise, considering the unique nature of that particular channel, and decide what is the cutoff. Now, COD. If you are not receiving, your money after sending, after delivery, say within 30 days. Why 30 days? Because you may have that kind of norms. But if you're not receiving, then most probably that money you will never going to receive. Debtors with credit balances, it happens. Creditors aging channel wise, creditors with debit balances. Creditors with debit balances means that we have given some advances. So we need to ensure we recover those advances and receive the goods in time. We may also be giving some loans to vendors, or receiving some loans from vendors. So all those are important areas. One of the most important area is your rentals. I doubt any there except for DMart, who owns their stores. Very few retail chain have taken stores on ownership basis. All these are on lease. Now, when you go for in retail industry, there are three systems which is quite prevalent. One is revenue share, where where they believe that your brand has a huge potential. One is fixed, where they believe that the potential is there, but they are not so sure about that potential. So they want to protect their revenue. And third, which is now in force at large number of places, especially malls, large landlords, is minimum guarantee and revenue share combination. So this minimum guarantee revenue share combination is essentially is a revenue share, but also a minimum guarantee, which basically says that if you don't do a business, you need to pay this much of rent. But if you do good amount of business, this is the amount of revenue share as a rent you need to give. And mind you, this revenue share, it can be 10%, 12%, 15%, some places even 20%. So the, and in such kind of scenario, the retailer will not be able to charge prices according to the rent. If they have a MRP of 2,000 rupees, whether they are paying 10% rent or 20% rent, they are going to give only they need to sell that at 2,000 only. So here the rent and deposit comparison, because almost everywhere they demand deposit. If you don't have a deposit, then that requires closer inspection, a closer view review. You have deposit but no rent, again require closure review of those items. Deposit recoverable for shop closed. If you open shops, you are going to close shop. Do you get your money in time? Now, it is not possible to do that. Happens on 100% of the cases. Now, there is some great mall is coming, and you want to have a shop. Now, are you going to wait till the mall comes up fully? Answer is no. Because if you want to location at that particular, you want to get that location. If you don't get it, somebody else will get it. So, and sometimes bad thing happens. The malls do not take off for whatever reason. So you need to recover those money. And you also pay, something similar. Okay, the shops is coming, you paid the deposit, but is the shop being open in time? Why? Because meter is running. Meter may be running because you paid the deposit. It's a notional, working capital cost, or you have paid the deposit for whatever reason, your fit out not happened in time. So you need to still pay the rent and agreement expiry tracking. One of the most important thing in retail is the location. And somebody will say that the three most important thing in retail is location, location, location. So location of the show up is so important. So it is equally important to then track the expiry. A large number of companies don't start their renewal process once the agreement get expired. No, they start very well in advance because they know if they don't show any inclination, then their competition can take over that location. So they start this process very well in advance. Loyalty program. We have touched this, initially when I said, what if you're always helping salesman is adding his phone number and earning the loyalty. So fraud can happen on earning side, burning side. Salesman can use somebody else points. So you need to do frequency analysis. So who is doing so many times of shopping? Now ask yourself a question. Let's say you want to buy grocery. When grocery, I mean, say atta, flour. Are you going to buy every day? Answer is no. Most probably you will buy for the month or maybe buy for the say 15 days or at least for a week. You are not going to go every day to the shopping. So this is where the frequency analysis come into picture. Let's say you get a 2% point. So you purchase, you have done a shopping worth say 1 lakh rupees. So you have not 2,000 rupees as a point. Now, this 2 point, where you can use it? Are you going to use say 50 point? No. You are going to basically use for 500, 600, maybe 1,000, maybe you will buy, say 2,000 worth of goods, use 1,000 worth of points. So you need to do frequency analysis to identify which is the most frequent customer and understand them, whether they are doing the shopping or somebody else is using that phone number. And say employee contact numbers and loyalty program member comparison. Sometimes there are genuine mistake happens. So to control that, you need to do this kind of analysis. Often, of course, you can also set up a system. Any employee joins, whatever phone number they gives, you take it and log that into the system. And conversion of walk-in into loyalty members. Many organizations have this KPI. If you have a walk-in customer, convert them into a loyalty program member. So it's a genuine program. But what prevents somebody for turning a cash walk-in customer to a loyalty program member? And when they are doing it, the person who is buying on cash doesn't even know what is happening. And validating net earning of a customer, how much. So when you do that analysis, you will know okay, somebody is earning too many points. Voucher reading more than once. If you have a control, this may not happen. But how do you know that controls are working? Only by testing that. Now, can a person buy goods in Mumbai and then can it buy goods, say Nagpur, in a single day? The chances is very rare. Why? Because how the person will travel from Mumbai to Nagpur? Only by air travel, the person would be able to do shopping at both the places. And how many such customers would be there? Very minimal. So if you find such kind of customers, then you should do a deep dive and understand, are they genuine customer or they are a fake customer? And reconciliation between POS and loyalty system. Unless all the systems come from the single vendor, then you need to do this reconciliation because you will be doing something called API integration, and API integration would get failed. If not for say 0.01%, it may get failed for 0.001% or 0.00001%. So you need to do the reconciliation so that your things are in control. Insurance. So retail is generally seasonal business. Say take apparel, lots of sales in Diwali festival season. So there is always increase and decrease in stock. How do you intimate this to the insurance company? Whether you're intimating in time, whether there is no exposure. It should not happen that you have insurance worth let's say 1 CR and the stock lying there is of 2 CR, 3 CR, and there is a fire, you won't get anything. There is a loss, you won't get everything. Now, whether the assumptions for insurance is still valid, cash in transit, cash in safe, contract or risk policy stock. You will say, hey, I have taken cash in safe policy. But have you ensured that that store actually has a safe? You will say, yes, we have a standard policy. See, having a standard policy does not ensure that the safe will be there. There can be, n number of things which can go wrong. There is a, say, Dimak. Because of that, they have dismantled something and they removed this safe and kept it somewhere. And there is a loss. What you will do? So all those assumptions you need to valid. At least when you're taking insurance or when you're doing an audit of insurance, you should do it and you need to track the insurance claim. See, with this, I have highlighted more or less which are important. Of course, I have not covered what you should be doing in warehouses, how should you go about auditing, e-commerce portal or marketplaces, your marketing spend, because those are generally you will get covered. So I try to cover what is that different in retail industry there. And anything is there, then the second slide on audit universe. So which cover a large amount of these areas. So with this, what it I discussed that you would like to know more about it, and what I did not cover, you would like to know. I'm sure there would be queries, there would be things you want me to ask. Feel free. Sometimes retail become overwhelming because of too many volume, too much of data. So feel free to ask any question. I'm at the end of my presentation.
I requested through a chat box as well, sir. So I have requested participants that they have any queries, please put it on chat box, so I can ask on behalf of them. It seems that there are no queries, I guess.
Give them a couple of minutes. I'm sure they
Yes,
would have
right.
queries. I don't
Exactly.
think I'm that smart.
No, but whatever you have explained might be participants have understood better. So yes, but definitely we'll wait for some time. And if we get any queries, uh, for our better, sir, we can consider that everybody has understood everything. And that's the reason.
Okay.
Yes, no queries.
So yes, we can end the session. Nothing is there. Let's end the session. I will stop sharing.
Yes, definitely. As we have no queries from anyone, so definitely. Thank you so much, Manoj Agrawal sir, for sharing a wonderful knowledge on this webinar, internal audit of retail industry. I guess you have explained it very well, thoroughly. You have given the insights about the retail industry, and from Institute of Chartered Accountants of India and Internal Audit Committee, I once again thank you for giving your time, for sharing your knowledge. Thank you so much, everyone.
Thank you.
Oh, yes. So now we can end the session. Yeah. Thank you. हाँ बोलिए ना. Yes. Please end it. Yes. Yeah. Thank you.